All right, folks. How are you all? Welcome back. It's about 8:08 a.m. Pacific time on Tuesday, September 29th, 2020. Here's your financial update for this day. Looking at my own portfolio and some of the bigger market stocks that capture the whole market. I'm looking at a lot of my stocks being down. I myself am 0.5% down today. And the NASDAQ is down, trading down, as well as the Dow Jones and the S&P 500. Since we're starting on price news, let's just go into it, right? Gold and silver are bouncing back up. I told y'all I was going to buy some silver if it went under 21 or around 20 or something. That didn't happen. It looks like it's kind of head back up. We'll see. Same with gold, although it's still trading under 1,900 an ounce. So I will talk about... Oh, wait, no, we forgot crypto. After yesterday's sea of green, we have mostly a sea of red, but, I mean, the ones that are mostly into, like Bitcoin, are still holding pretty well here. So I'm not really too concerned about anything here. Let's check out this easier-to-read chart and see if the top 50, who the big winners and losers are. Yearn Finance is down. Good. I believe that is probably a scam. OMG is up. Not so much a scam. I'm actually more of a believer in that. Same to see Uniswap down almost 10%. I don't have those. I don't have Uniswap or Yearn Finance. I mean, those are the hot not ICO, but that's the whole term for this year, right? ICO was the big kind of quick and easy money of 2017, and this year it's DeFi. Everything's about DeFi. You want to get on the DeFi train. That's high risk, you know. I'm just not in the know with the right people. If anyone hits me up to jump into a DeFi coin, I'm way too late. I'm the sucker who's about to be left holding the bags. So unless you know the right people, I wouldn't jump in these. These are all pump and dumps, in my opinion. Probably the reason you're all here, because I kind of used a catchy title, is this market right here. This article, all markets, even gold, are about to crash, says investor in all cash. Markets will see a major correction soon, most likely before the presidential election, says Clem Chambers of Investors Hub, who has allocated all his holdings into cash. Wow. So this guy's a major, I would assume, deflationista if he's got all his holdings in cash, and I wouldn't be surprised if he's holding it himself, like if all his cash or most of it is spread out around his house in a bunch of hiding places. Because if you're going all cash, you believe that money is going to be impossible to pull out of the banks, and you probably are more heading towards a deflationary system. That's what you think, right? You're not worried about your money losing value. In fact, your money is going to gain a ton of value to the point where like people are going to try to hunt you down for it. That's generally what a cash gang person would probably think. Here he goes. In quote, I got a warning from the market about 10 days ago, so I cleared the decks because I think it's highly likely, not absolutely certain, but too likely to be in the markets or going to be in for a crash, says Chambers. Normally before a crash, I experience what I call a market malfunction where my portfolio just doesn't behave as it should. Interesting, because we've all kind of gotten that feeling. I can remember telling a lot of people, I just don't understand this market right now. It should be way down. Here he says, Chambers added that he has a 65 to 70% certainty of a market sell-off of over 25% happening in the coming weeks, and under such conditions, it's best not to be long on particular equities. It's like a piano falling out of a window. You just don't want to be under it. Under such a flash crash scenario, most assets have a positive cross-correlation and tend to fall together. When it happens, there will be so many margin calls that pretty much all assets are going to get smacked, just as they did in the crash earlier in the year. Gold got smacked, crypto got smacked. It all got smacked because when the market crashes, it's the people that get margin calls that causes the knock-on vicious circle. Okay, I don't think this person speaks English who wrote this. Under normal market scenarios where a major market sell-off is not expected, Chambers would recommend an equal allocation of 33% cash, 33% stocks, and 33% gold and cryptos. Interesting. I'm kind of there. Sort of. On the economy, the full effects of the pandemic have not been felt, and the increased money supply from quantitative easing is going to drive up prices and create inflation. Well, see, here's the thing. If you think inflation's coming, then why are you going into cash? Your money's going to be worthless. We've got a massive deficit situation where governments can't afford their budgets, and that's an absolutely textbook example of what creates hyperinflation, let alone inflation. It's when governments can't cover their budgets, they just print money. We're seeing the beginning of that, not the end. So I agree on that, but why is he going cash gang if he thinks inflation is coming? I feel like you would want to be gold and crypto. Maybe he's more experienced than me. He probably is. Look at him. Interesting. So that's probably why you all came, but I definitely wanted to showcase that. This video probably goes into a little bit more detail. I'm not going to play the video. Let's see how long it is. It's 20 minutes. That's not what this channel is about, but it's on Kitco News, so you can check that out. Since we talk about Jack Dorsey, because he's so insanely bullish, I saw this article, and since it follows what I talk about on this channel, I figured we'd do an update. Jack Dorsey, the CEO of the social media giant Twitter, has said that Bitcoin and blockchain are the future of the platform. So he basically says, I'm going to turn Twitter into a fucking payment website. It's going to be the newest PayPal. You're just going to have a Twitter account. People are going to send you money. That's what he wants to turn Twitter into, is what it sounds like. That's a big deal. Twitter chief Jack Dorsey is not letting up on his BTC and blockchain evangelism, describing the novel tech as the future of the microblogging platform. Twitter on the blockchain, quote, blockchain and Bitcoin point to a future and point to a world where content exists forever, where it's permanent, where it doesn't go away, where it exists forever on every single node that's connected to. According to the Twitter CEO, Bitcoin builds upon the foundational ethos of the internet, which is the creation of a trustless and distributed ecosystem. Indeed, if the emergence of the internet eliminated information friction, an argument could be made for Bitcoin being on its way to removing economic and monetary friction. For Dorsey, the ultimate goal is for Twitter to transition to a public blockchain architecture, thus making the popular microblogging service a wholly open protocol. Commenting on such plans, the Twitter chief added, "We'll focus on becoming a client of it, the planned blockchain, so we can build a compelling service and business where anyone can access and anyone can contribute." A move towards an open Twitter is in keeping with Dorsey's recent activities in ensuring easier access to technology, as previously reported by Crypto Potato, where I often get my articles. Dorsey's financial services Square recently established a nonprofit organization to fight against crypto patent trolls, which we talked about in a previous video. Dorsey's endorsement of a possible Twitter migration to a blockchain-based framework comes as the company is looking to revamp its security protocol. Back in July, hackers took control of several high-profile Twitter accounts to engineer a crypto scam. With the 2020 U.S. presidential election only a few weeks away, the onus is on Twitter and other social media services to adopt even more robust security measures. The Twitter CEO waxing lyrically about Bitcoin is not a new occurrence. Dorsey is known to hold positive sentiments about the largest crypto market cap. Will Dorsey commit Twitter funds to Bitcoin? While Dorsey is a strong Bitcoin proponent, it remains to see if the Twitter CEO will invest the company's funds directly in it. Back in August, MicroStrategy bought $250 million worth of Bitcoin, making the flagship crypto its main reserve. Shortly after the first buy, MicroStrategy bought another $175 million worth of Bitcoin, bringing the total number of the company's BTC stash to 38,250 coins. That's so crazy. So crazy. Oh my God. The MicroStrategy news, which we've touched on, is insane. Jack Dorsey is very bullish on crypto. I'm told he maxes out all his purchases of Bitcoin every week with his money on the various fiat gateways where you can buy Bitcoin. So that's really cool news, though I think this guy is a major pedofist. This news is interesting because it has to do with Coinbase, which is America's and probably the West's #1 way of buying Bitcoin with your money in your bank. You can go to Binance and a number of other exchanges, but those exchanges are mostly for owners of Bitcoin who want to use their Bitcoin to buy something else. If you want to literally take the money out of your bank account and convert it into crypto, you go to Coinbase. That's one of the main ones. And this news is not only crypto news, but it looks to be political news, so it might make it to my other channel. But you might call it a stand by not taking one. Coinbase has drawn a line in the sand for its activist employees. Brian Armstrong, CEO of Coinbase, took a strong stance against employee-driven corporate activism over the weekend, explaining that going forward, his company would be mission-focused. That means Coinbase will devote all of its attention to achieving the goal, creating infrastructure for the crypto economy, but will eschew any kind of activism and won't take a stand on policy or societal issues that go beyond that mission. So basically, based as F. I can tell you, working in a Silicon Valley-based tech company where I am a full-time employee, which is why I do not show my face or try to give away any bits about my identity, the companies are all mainly taking a stance, which means their leaders lean left. When a Silicon Valley-based company takes a neutral line, that generally means that they are right-leaning but don't want to lose all their talent. So I would basically assume this guy's voting for Trump. Like, I would basically assume this guy leans right. But it's good to hear. I mean, I want more Silicon Valley-based companies to be more traditional in the fact that you need to care about shareholder profit and making money and stop taking up activist causes. It's almost like this guy read Corporate Cancer and he knew what's going on. A book by Vox Day, which I recommend every company CEO read and identify if you have the corporate cancer within the company you run and excise it immediately. Let's see. It's not that those issues aren't important and don't need solving, Armstrong says, but that Coinbase's best shot at making the world a better place is by achieving its central mission. It's clear that Armstrong's post comes in response to some kind of employee movement at Coinbase rather than pressure from the outside. He explains how he recently realized some employees believed Coinbase's world-changing mission means the firm should actively push forward other ways to improve the world. Now that he's taken that stance, though, he was very politely told these people to be activists on their own time or find another job. Excellent. What's also clear is that Armstrong believes he's far from alone among his C-suite peers, not just at Coinbase or in the crypto industry, but among executive teams across corporate America. By sharing his position publicly, Armstrong obviously hopes it resonates and catches on, perhaps lighting the spark of some kind of backlash to the cultural moment that has, among others, seen Scientific American take a position on the presidential race for the first time in its 175-year history. Right? And Armstrong is probably right to think so. Although barely any other CEOs respond to his post, several influencers chimed in their support. To be fair, the odds were skewed in his favor. Big chunks of the crypto community, generally known to favor libertarianism and pseudo-anonymity, would certainly feel affinity to Armstrong's leave me out of it position. It's true. People who invest money are risk takers, are probably going to lean right just naturally. People who lean left don't have money to invest. Of course, there was no shortage of people calling out Armstrong for taking a position that doesn't just go against the grain of a trend sweeping companies throughout America, but is in their view fundamentally cowardly and on the wrong side of history. That's right. He's a racist and violent white bigot now because he's not actively out marching and torching and looting. Ultimately, it will push away talent, critics say, since it will set the wrong tone with exactly the kind of employees they should want. Many workers feel empowered and potentially more productive when they're allowed to speak out on causes. We'll see about that. Something tells me the pendulum is swinging the other way, and this guy might be getting right on that momentum. This article is not as long as you think, but let me just read. Sapping productivity. Yeah. Whatever. Read the rest of it on your own, guys, but I'm glad he did it. And we'll see how it goes, but I'm not worried. They're in the financial space. Another company that you know I'm familiar with if you've been following me in my channels, Robinhood. They're Silicon Valley based. I'm pretty sure they're out in the Bay Area or near there. And they are literally a sponsor, at least used to be, on the Dan Bongino show. So their marketing team, running ads with Dan Bongino, that they're based too. They wouldn't literally get on that show if there was a huge push by their employees not to. However, I haven't heard it on his show in a while, so maybe they got kicked off. Maybe the employees voted it out. But there are other based companies in the fintech space. This would I would classify this fintech or financial tech. Anyway, guys, good update. Chat with y'all tomorrow. Have a great day.